The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks rank buy. I am Brian Poland. As you can see from the Ohio State logo here, that means I'm the only person that wears that kind of stuff. And I am the aggressive growth stock strategist here at Zacks Investment Research. And I've got two stocks for your aggressive growth radar screen, and I am hungry for more. Let's get to it, and let's fill up our bellies with these two stocks. So let's just jump right to it here. We've got two stocks, and the first one is going to be Pilgrim's Pride, and that's PPC. Pilgrim's Pride chicken. You can see it's a food, meat products name. It's a Zacks rank 3 right now. It just kind of slipped a little bit. But an A for value and a B for growth, usually we always try to go with our strong growth scores on this. But the reason I'm bringing this one out and the next one is because it's a food name. And, I think we saw what's happening over in Sri Lanka and several places around the world. There's grave concerns about food. And obviously, if you're a producer of food, I'm of the belief that whatever you're doing is going to become more important to investors pretty soon here. So food stocks just in general, and I don't really mean the distributors of food, say a McDonald's, even though they own a lot of their own supply. But this is like these guys make all the chickens. They do some good stuff with the chicken. So, the market having a little bit of trouble. The stock came in from, sharply from some highs, bounced back up, and looks to be, trying to base here at 30. Let's go through the rest of this notion here before I get too deep into this nonsense of a chart. Because, the chart just tells us where the price has been. It doesn't tell us much more than that. So let's jump down here on the detailed estimates page, so you can follow along at home. We got a beat, we got a miss, and we got a big beat, and then an even bigger beat. I love that, where you see these beats just, increasing in size. That's wonderful to see. So let's take now a look at our estimates. What are our estimates doing? This is interesting. You would think that analysts would like this story. I would think that they would. $1.17, and we can see it's going the wrong way. So we're going to put a negative there to $1.12. So a nickel got shaved off, and no estimates for next quarter. I don't know what's going on. That's I don't like seeing that. And now this number goes from 326 to 361, the right direction. But you can see most recently that's a downward move from 372. So someone was pretty aggressive and then they backed off. And you can see same instance here. And boy, this is a real perplexing event here. 314 to 301. So they're losing 13 cents there in next year. So a little worrisome about the earnings growth, obviously, because that's a negative growth. And then what's going on there. So maybe the analysts aren't seeing or watching the news, or maybe we've got bad estimates. And I see that we don't have any updates recently, and we don't even have any sales updates. So we could have lost analyst coverage here from one of the big banks that covers this name. But we'll dive into that later down the road. So let's look at the valuation here. 8 times forward earnings. Which is pretty low. 2.5 times book. The value investors all love that. I don't like seeing the price to sales less than 1 at less than half. Good growth here. Look at that. 30%, 29.5. I'm going to round that up. That 5.4. I'm going to round that up to 30, just because I did that. 30% growth over the last year. Margins, razor thin here on chicken, but moving in the right direction. It's nearly 100 basis points, 94 basis points of improvement right there. Would love to see those margins increase. And boy, oh boy, Brian did a bad thing. I didn't put the chart in that one. We'll have to skip the chart, the idea of the chart. And I'm going to go, I did it bad. All right. Let's move along to the next one. This is potluck. we can see Brian Bolin just doesn't know how to use a computer. I think everyone knows that. Brian Bolin. I mean, he's an Ohio State fan. That's what you get. Sanderson Farms is my next pick. It's SAFM. SAFM, Sanderson Farms. SA Sanderson, SA, and then Farms, FM. So sometimes I like to look over the ticker and try to figure out why they came up with that ticker. It's a Zacks rank #1 strong buy, and a nice little pair of A's up there for value and for growth. This is a food name. As we're sticking with the idea, I'm hungry for more. Look at this chart. Looks a lot better than the other one. So here we are on Sanderson's Foods. We're looking at the detailed estimates page. We see a beat here and a beat here. Zacks didn't have estimates. So again, this could be an instance where there wasn't coverage. Maybe the analysts that write on this weren't submitting. Maybe there was a ghost in the machine. There's all sorts of instances where there can be problems. But now let's take a look at these earnings estimates. Look at this. Watch out. 771 to 1242. Woo, baby. Look at this. 762 to 1261. I mean, that's $5. That's $4.99. Wow. And look at this. 31.89 to 46.23. I mean, let's bust out the Hubble telescope to see where these numbers are jumping up to. $26 to 33. A little decline in the earnings growth rate there, but still, this is kind of what I'm talking about. It's like all of a sudden we wake up, we're like, oh my God, we don't have fertilizer. Some countries just don't have food at all. Protests, riots, things like that. So that is not good. So what's going on? What is going on in this world today? Well, 30% sales growth is what everyone's looking at for Sanderson Farms this year, and then somehow a contraction next year somehow. It's kind of amazing. You never know. I mean, the analysts, they've got their way of doing things. I'm not picking on anybody, but that seems a little wild to say when everyone is starving that they're not going to need to grow more or won't be able to charge more for what they're growing right now. 4.6 times on the forward PE. Gigantic growth, 35% the last quarter. 2 times book. I love it. Getting close to that 1-time sales. Okay, look at these margins. 9.4 to 12 to 15. I mean, what are we growing? 300 basis points a quarter here? Outstanding. Love to see it. Love to see it. So hopefully Brian Bolin did this one the right way, and we get a chart. And yep, this is Sanderson Farms chart. So I know this is going to be the problem for a lot of people that follow the Zacks stuff and my stuff. We're seeing a $200 stock. And I know that a lot of retail investors say, I'm not buying no $200 stock. Why would I do that when I could buy a $20 stock? Price isn't the thing. It's the percentage movement that is the most important thing. And just in general, what drives the movement is earnings estimates. And you can see these earnings estimates are nice and high. But I'm a little fearful of this number. It needs to really increase. And I'm going to admit something right here. These $200 stocks, should we get into a recession? And you want to think that food is somewhat recession-proof. An investor looks at that $200 thing and thinks, boy, if this thing gets cut down to 140, 150, I mean, I'm going to remove the high price. They have further to go down, right? I mean, that's a logical argument. So as much as food is mildly recession-proof, and we have just that little cautionary tale here of the earnings for next year coming in a little bit lower. Still, the valuation here is very low, very attractive, and I think the macro environment speaks to this being a good possibility. So there it is. Well, I hope that was filling and nourishing to your soul as it was to mine. Obviously, keep those 2 stocks on your aggressive growth radar screen. Be sure to join us next week when we take a look at 2 more aggressive growth stocks for your radar screen. And until then, go check out Zacks.com/promo for all of our wonderful promotions that are available to you right now.